We have a huge housing supply issue. We're in the middle of a crisis. We need to be able to allow the market to develop. We need to build big, we need to build fast, and we need to build quick, or else it's going to continue getting uglier. And the more heads that we can put together to help make our communities better, everyone wins, everyone benefits, and ultimately everyone profits.
Welcome to the Inside Forbes Councils podcast. Each episode shares transformative insights and advice from members of Forbes Councils, a group of invitation-only communities for successful executives and entrepreneurs. This is Inside Forbes Councils.
Hey everyone, and welcome to episode 8 of the Inside Forbes Councils podcast. I'm Stephen Gnoza, the producer of the Inside Forbes Councils podcast. Today, I'll be talking with André Bueno of the Forbes Real Estate Council. He runs the Bueno Group, which builds, operates, finances, and manages affordable housing and market-rate apartments all across the United States. André has an interesting background. We'll talk about how he left low-income housing, got to Wall Street, and then went back. We'll discuss his philosophy around real estate investing and disconnects in the housing market. And hopefully, possibly for my own selfish interests, we'll talk about what someone should know before attempting their first real estate investment. André, thank you for being here. Let's kick things off with a little self-introduction. Tell us a little bit about you and your company.
My name is André Bueno. I run a vertically integrated real estate development company. We specifically focus on going into lower income communities and helping address social issues, environmental issues, and coming out on the back end with a profit.
Okay, low-income housing. How did you get into that sector? Most people, I imagine, think of real estate investing as flipping houses on TV. What led you to low-income housing?
So it all started in 1984. My parents had actually, they grew up flipping houses. They eventually were living in a lot of like low-income neighborhoods around Los Angeles. And given that that's the environment that we were in, we really understood how that product worked. And with what became first a job, eventually scaled into our passion.
So that's how you came to be at this crossroads of real estate and impact investing. Tell me a little bit about how you see these overlap.
So real estate and impact investing, it's a very specific niche. We having grown up in these like lower income neighborhoods, what I really wanted to do was find a way that we can add value to the communities we're in. So by 2006, I took over my parents' business, and we were a small scale operation in Los Angeles. We were dealing with a lot of struggles between drugs and crime and other things that these lower income communities kind of deal with. And at the time, I was going to community college. I wanted to really make, a difference, and I couldn't really see the way out. So I went and got a corporate job. I went to go work on Wall Street, got a job at Goldman Sachs. And during my time working there, it really solidified a lot of different principles with regards to how you can use the capital markets to really further a lot of social issues and help really impact these communities. So by 2014, I ended up spending a good majority of our time figuring out how to structure a business around going into these lower income communities and ultimately finding purpose in that job.
And what was your parents' reaction to this? I mean, they had been doing this. You went and got a good job at Goldman Sachs. I mean, I worked at Goldman for a number of years. It's a great company to work for, and many people would kill to have a job there. Yet here you are looking to go back into the family business, so to speak.
So 2014, I'm actually working at Morgan Stanley. I'm in New York. If you guys have watched the movie The Big Short, our group was actually selling derivatives. And I call my parents, and my parents live in Brazil, and I tell them, all right, guys, I have this great idea. This really stable job that I have, I'm going to quit. And I'm going to go back to doing the things that we've been doing for the last 20 years.
Did they try to talk you out of it?
My mom called collect to my office line in New York, crying over the phone with my dad and begging me, please don't leave your job. You have something really good going for you. The last thing you want to do is be an operator. And you have to understand, when my brother and I grew up, we were kicking carpet, doing plumbing, doing all the electrical work. We were so involved in the day-to-day business, it ran us. Somehow, some way, my parents managed to be operators for the better part of a quarter century. And it was brutal. So now as I'm coming out and I'm thinking, by the way, I learned these financial products that we can take out these loans, we can leverage this up and take out $1 million from the bank and do this other thing. My parents are in their late 60s. That was the last thing on their mind. They want to fish, kayak, and maybe boat. They do not want to have a $7 million loan with X, Y, and Z financial institution.
So given that your parents weren't really on board and walking away from a Wall Street job, and in some ways it's very easy, in other ways it's not so easy, but how did you know this was the right move to make? What convinced you that this was the right direction to go?
So to put a lot of these things in perspective, I had spent the better part of 2013 and 2014 really immersed in personal development. I was reading a lot of different books. And what I really wanted to do was get into the real estate space. And you have to understand, when you're the guy who's just cleaning carpet or you're painting and you're not really involved in running a business, you're just a service worker, it was a completely different mindset, which meant I had to do really two things. In the personal development space, they talk a lot about burning the boats. So before my parents could say no, I went to my boss and told her, I'm quitting, I'm starting a business, and no one's going to stop me. My boss was less than thrilled. Clearly felt that I was destined to fail. And a lot of that really motivated me. I booked a ticket, moved from New York, moved actually back to the same low-income housing project that I was living in before. I had to move in with my younger brother, and now I'm renting a room with him. And to make matters even more interesting, I now have this real estate business I want to start. So I had, I think, about $10,000 worth in savings at the moment. And I ended up buying a whole bunch of used books on Amazon. And I'm watching videos on YouTube. I'm calling all my friends, and none of them can relate. And I spent the first year just reading. When we did our first acquisition, I ended up picking up a 5-building low-income housing tax credit portfolio from a real estate private equity fund. I had a lot of time on my hands between setting up the business and hiring my first couple of employees. My very few spare time that I had, I ended up reading a lot of different books. I read 158 books the first year and was really trying to learn everything that I possibly could.
And this was about 4 years ago then. So tell me about the growth of the business. You do the first transaction. What happens next?
So the last 4 years have been interesting. I took our small business as an operator. We grew it, had a couple systems and processes in place, ended up, after that 5-building portfolio that we acquired from that private equity fund, I ended up realizing that a lot of the education really came down to not just knowledge, but actually networking. So enrolled into Stanford, did a program that specifically focused on scaling professional businesses. From there, we acquired a 17-building portfolio just through a variety of different transactions in the Midwest. So we scaled our business from California up into the Pacific Northwest. I was in the Midwest for a couple years. We eventually sold out of California, and we started focusing on really our operations. We started growing our team. And at the same time, I realized that it's not just about having a great business, it's also about having a great purpose. So I was really fortunate. I got into a program, which quite frankly, I did not complete, at the University of Pennsylvania, specifically focused on social impact and public policy. And as we were learning about how to create a better mousetrap, from a business perspective, and how to really engage the local communities, it really taught us about what were the best things that we can do to ultimately add value to the communities we're in.
So you've left Wall Street, you've gone back to your roots, so to speak, and now you've got a mission-driven business. Given the experience you would have gotten from Wall Street, why not commercial real estate? Why focus on impact?
So when I was operating my parents' business through the financial crisis, a lot of the experiences I had were things were hard. It was brutal. We had multiple fires we were dealing with. We had loans getting called by different banks. We were dealing with tenant issues. Yet I felt a purpose in a lot of what we were doing. And then you take the flip side, I go get a job on Wall Street, and it's all about very bottom line oriented. We're looking just at the profit. We're looking at our P&Ls, and that's really driving a lot of our decision. But I really didn't feel like we were actually doing something that I felt connected to. So when I thought about coming back to real estate, I didn't understand anything else other than this low-income housing business. So it seemed like the easiest path for me to get back into scaling a business. But then over time, I started realizing that this is what I wanted to do. As we started building our business model, I started thinking about this from a triple bottom line perspective. I wanted to make really an impact from a financial standpoint. I wanted to be able to provide value to our investors and to our shareholders. Ultimately, I also wanted to add value to the communities, and I wanted to make sure that we were doing something from an environmental standpoint. So a lot of the principles I learned at Goldman, for example, where we had a specific group that focused on doing social responsible investing, we applied a lot of those same principles to our business. So we're going into communities, for example, where we are taking it from a financial standpoint, and we're doing a lot of what Blackstone does. We're using proper capital structure. We're really looking at where we can add value in different areas of the business, whether from a physical standpoint, mechanical standpoint. We're enhancing a lot of the different systems. We're maybe hiring the right people or letting go of the people that shouldn't be there. And that really drove a lot of our financial performance. But then when it comes to our social causes, we partnered up with a lot of local government institutions, sometimes even on a national scale. So for example, in the Midwest, we ended up working with the U.S. Office of Refugee Resettlement out of D.C. We were helping house a lot of political refugees. And it really felt like we were actually making a difference in a lot of lives for these individuals who were moving into our communities. And ultimately, as we kind of moved on to this administration, we've been helping house a lot of homeless veterans. And lastly, from an environmental standpoint, we're doing everything you could think of from a sustainability perspective. We're helping reduce our carbon footprint by implementing LED technology where appropriate. We're looking at solar options, and even looking at, the newest technology to figure out, can we operate the business better? Can we add more value to our communities? And ultimately, hoping to really return a story to our investors that shows that it's not only do we have purpose, but the profits are in it. And a lot of that I really cover in our business.
So you're approaching this with multiple objectives in mind. How do you evaluate a transaction then, given this tug of war between environmental, social, and financial goals?
So the way that we evaluate transactions are pretty multifaceted. First and foremost, we want to get to know exactly what we're purchasing. We're talking about projects that we're buying all over the country. I'm not sitting here in my cushy office, looking at projects on the other side of the country. I'm actually moving there. To give you an idea, when we invested in the Pacific Northwest, I moved to a 40,000 person county. I knew no one there. Granted, that also gave me a lot of flexibility to read and get better at our business. But we're spending time in these neighborhoods. We're showing up in the morning and seeing who's going to work and who's hanging out. We're coming back in the afternoon and coming back in the evening to see what does traffic look like. We're coming back at 2 o'clock in the morning to figure out what does the activity look like after hours. And a lot of the issues that we see in these communities, between drugs and crimes and gangs, really has to do with management. And that's where a lot of our operational expertise comes from. We're not only integrating our supply chain by, cutting costs where appropriate just from day-to-day activities, but we're really figuring out how can we make the environmental work with our financial performance. So to give you an idea, when we acquired this 17 building portfolio in the Midwest, a lot of the different assets had a lot of outdated mechanical systems. They had a lot of inefficient utility billing systems. So a lot of what we ended up doing was we converted all of the lighting to LED. We piggybacked a lot of the systems using solar. And as we really implemented a boots on the ground kind of execution, we were there every single day turning these communities around. And a lot of these communities, to give you an idea, they had an embedded profit margin already built into them because they were 28 to 30% occupied. So we're picking up these assets completely distressed. We're having to operate really with no margin. $1 comes in, that same dollar is going back to pay our property taxes, to pay our utility costs, to pay our staff. And it became very challenging. But as we start looking at what does the 5-year horizon look like for one of these acquisitions, it really gives us a lot of margin to think about how do we structure these deals. And lastly, from a social perspective, when we're inherently creating housing options, we're really thinking about how can we make our assets better? And the way we actually add value is we add value sometimes through service. It's partnering up with the right nonprofit. It's partnering up with the right, maybe it's a local organization, maybe it's a church. And what we're able to do is deliver a lot of value to our residents, which ultimately delivers value to the asset itself. And ultimately that rolls up to our investors.
Great. Let's take a quick break and we'll be right back.
Are you a successful executive or entrepreneur with insights to share? Learn more about our invitation-only communities at ForbesCouncils.com. Forbes Councils members have the opportunity to collaborate with fellow business leaders to overcome challenges and create new opportunities. Members also have access to support benefits that help them save time and money, and a platform, Community Voice, on Forbes.com, through which they can amplify their voices and exchange ideas. See if you qualify at ForbesCouncils.com.
We're back, and today we're speaking with André Bueno of the Bueno Group. André left a career on Wall Street to pursue real estate investing, predominantly in the low-income housing sector, and he's done very well for the past 4 years. André, where do you find your investors? How do you get financing for these projects? Is it banks, private investors? Where's the capital coming from?
Sure. So from a capital stack perspective, we're looking at any type of capital that we can get to get these projects done. So we're looking at, we have sovereign wealth that helps fund a lot of these transactions when banks aren't the most appropriate means. We have a lot of opportunistic capital, which gives us a lot of flexibility in the types of projects that we do. Really from a debt perspective, we use any sort of debt that'll get the deal done. Granted, we're always looking for the most competitive terms, the most competitive markets. We want to find people that not only give us great pricing, but also give us great flexibility. And sometimes that's a local community bank that we're signing personal guarantees and putting it all on the line just to make the deal work. Other times it's we're working with hard money lenders. We've done a couple agency deals along the way. And it really depends on really the transaction.
Okay, so for someone who might want to invest in real estate, someone like me who's kind of always been interested in it, you're painting a very different picture than we see on Bravo or HGTV, where people buy a beautiful beach house and flip it, right? Low-income housing, which in your case is investing in something you're familiar with, seems like a much more practical approach. But generally speaking, what advice do you have for first-time real estate investors?
So for a first-time investor, a lot of it comes down to investing in what you know. And if you don't know much, either you get smart or you find someone who's a subject matter expert. A lot of times when I get questions like, hey, I want to invest in real estate, I want to build my wealth this way, and they have something else going on in their lives. Like if you look at my career trajectory, for example, I burned all the boats. I quit my jobs. I moved across the country. I dedicated myself to living in a 40,000 person county in the middle of nowhere because this was my job 24/7, 365. And unless you have that sort of dream, I would highly recommend finding someone who is a subject matter expert that you're able to leverage off of their experience. A lot of what we've done has been really partnering with the right individuals as we're going into different markets. And a lot of that means we're building our teams completely from scratch. So if you're looking to get into investing, you really have to think about where are you starting off from. If you're starting off from the perspective where you have the capital available and it's significant enough that you can get your own deal done, maybe you just need one partner. If you don't have enough capital to get one project done, maybe you go into a crowdfunding platform.
So speaking of crowdfunding, do you see real estate crowdfunding platforms like Fundrise having a lasting impact? Do you think they're here to stay and will shape how investors get into real estate, or is this just a passing fad?
I think crowdfunding is a area of the business that's going to continue to grow. More and more people are seeing the benefits of investing in real estate. They see that it's more than just buying a house. It's, what kind of equity can you build with that? Partnering with the right investors, a company like a Fundrise or a Realty Shares or Realty Mogul. These platforms, they have professional investors who are able to screen out operators who can really give you the biggest return on your time.
Do these platforms also invest with secondary objectives in mind, such as social or impact investing goals?
These platforms, they ultimately are looking for what is the bottom line. And a lot of times where you're going to find this bottom line, I guess, operational efficiency will come from either the fix and flip world or areas like, in the middle of the country and where you find distressed assets that need, a lot of work. So I'd say yes, maybe not in a very direct, in your face kind of manner, but we do see that a lot of them are very open to our projects, and we have pitched a lot of our deals to them.
What if you want to invest in the old-fashioned way and buy an actual property? What advice do you have for that person?
Yeah. So when you're thinking about investing in real estate, it is ultimately a business. It's not a hobby. And there's a very clear distinction between that. To be honest, I ran our business very much like a hobby for the first couple of years, not having enough systems, not knowing how to structure the deals, not having the best legal counsel. And over time, it's really caused me to hone in on what due diligence means. And there are so many complexities surrounding every single deal, from the time you find the deal to how you finance it. And the reality is there is risk involved. When we're investing millions of dollars into a different transaction, a lot of times we have to have multiple exit plans. And this is something that no matter how much you prepare, there is going to be the time where you're going to need the plan B, and then the plan C, and then the plan D. And sometimes you just get hit with the black swan event. And the reality is that when you're running a business and you have the right systems, sometimes you can mitigate for those risks. But a lot of times you also need to have strong leadership that's able to take you through the turbulent times. I can't tell you how many times we spent nights where we're not sleeping because we have deadlines we're trying to hit. We have a bank loan that's coming due. We're working on transactions, but we don't have enough time to really do all of our proper due diligence. To give you an idea, a lot of the assets we were picking up in the later part in the cycle, we were doing 4-day due diligences from start to close. You don't have enough time to bring professional services at that point. So we're having to recruit our best and most talented resources. We're calling favors from all over the nation. And ultimately, this kind of flexibility allowed us to win a lot of very high-profile deals. So as you start thinking about investing in this space and looking at different projects, you have to understand that it's not just, I'm going to go and put my money in this very cheap project that I see on the other side of the country. A lot of it comes down to who's running the project, what systems have they gone through, and ultimately, have they gone through a real estate cycle? I can't tell you the experiences that I've had going through 2006, 7, and 8, they've changed my entire perspective of how we run our business. It's made us maybe a little bit more cautious than we've needed to. It's also given us a lot more understanding and insight as to how we approach the later part of this cycle.
Do you think we're coming up on the end of another cycle?
Look, Sam Zell was talking about this a couple weeks ago, where he thinks oversupply is one of the biggest things that is going to be hitting our markets, especially in the major metropolitan cities. Yet, I guess we have, this perfect storm. To give you an idea, a lot of our business now, we've been focusing in the Midwest. So we see lots of growth and lots of opportunity there. We're extremely bullish on everything going on that side of the country. At the same time, we're seeing that markets like Los Angeles, you have a lot of factors, from whether it's a legislative standpoint, from a land use standpoint, from a construction standpoint, that are really impeding oversupply, where in previous cycles you had, your typical boom bust. Banks would lend too much, investors would get too crazy, developers would overbuild. All of a sudden, something would happen, there would be a collapse. Yet, banks are a lot more cautious. They have a lot more red tape around them. Cities are a lot more proactive on how they're allowing development to happen. And the fact that we're so underbuilt as a nation, which is really reflective of the lack of housing that we built during the recession, a lot of those kind of trends are really playing out today, where we don't have enough affordable housing, where even middle income housing, so people who are, traditionally in the workforce, call it 80 to 120 or even 150% of the average median income, they're having a hard time being able to keep up, because rent growth has outpaced wages significantly over the last couple of years. You have lots of strong demographics that are supporting really the move towards urbanization. You have millennials moving to the bigger city, and bigger city is very subjective. It could be Los Angeles, San Francisco, New York. It could also be Phoenix, Albuquerque, Vegas. So as you're seeing a lot of people moving into these major cities, what we're really looking at is we're looking at major metropolitan cities that have an education hub, that have a healthcare hub. That way we're able to not only accommodate the millennials, but also the baby boomers. And if we have any sort of stability, any other, third industry that actually adds to the workforce. So for example, in Michigan, we're in Lansing. It's probably one of the best markets, I'd say, in America. We have the healthcare system that's booming. We have a number of local universities. and the state government that adds a lot of, call it recession-resistant industries that don't seem like they're going away anytime soon.
Well, that's an interesting way to evaluate different cities, but if there's an oversupply of housing, yet banks and governments are restricting development, does that mean there's a lack of demand?
So there is a lack of supply. We have a lot of demand, but what we're seeing is, so take Los Angeles, for example. We have not enough parcels for you to be able to develop on. Most of the city is zoned for single family residence. So a lot of the areas that you can build, you have to buy something, tear it down, carry it through the construction process, make sure that obviously I guess on the front end, the city has to approve it, the community has to approve it. Assuming those things happen, you're building this thing. When you start your construction process, and by the time you deliver, you're looking at two completely different cost structures. Labor has gone up significantly, almost 50% year over year. We have real estate has actually become extremely global, really from an investment standpoint, as we've seen, but really from a material standpoint. Canadian lumber is up about 14% year over year. Aluminum is up 18% year over year. Copper, all these different items that go into the actual construction process, they're just outpacing the rents that you would get by the time you deliver. So that's why you're seeing a lot of the assets that are being developed. They are either on one hand 100% government subsidized, or on the other hand, they are top of the line, class A, fully amenitized, communities located in your local, central business district. And it makes it hard to do anything in that missing middle. We're seeing a lot of new technologies, modular construction, prefabrication. We're seeing 3D printing. But at the end of the day, we're battling building departments that haven't had, I guess, a lot of updates, whether it's to their community plans or to their processes. And there's a lot of inefficiency from really all angles, and really a lack of public understanding as to why rents are so high. And that causes a little bit of a head fake, where you have communities that they want more housing, they need more housing, but they don't want that luxury housing product built next door, or God forbid, you don't want that affordable housing stuff. So it doesn't get built. And now you have more people that are competing for the limited amount of housing. And what I think the public needs to understand is, any sort of development that you see in any one of these cities, it usually takes about 3 to 4 years before, by the time the person thinks of the idea to the time they actually open their doors. If it's a large construction project, it could take decades. So if you're looking at our housing stock, we're not building enough as needed as a nation. And it becomes very challenging as we start thinking about, how do we improve our housing stock, as a lot of it's becoming functionally obsolete. Majority of the housing that we have built around the nation was built post-war, 1950s, 60s, and even 70s. And as we've had that decline, given a number of real estate cycles and a number of various factors, it's become very challenging for renters to even find a place to live.
So what would need to happen to solve for this missing middle between low-income government subsidized housing and high-end luxury real estate? Is this a business problem, a political problem, a market disconnect?
To be able to address the issues that the missing middle are facing, everyone needs to be on the same page. You have so many different silos. If you're a developer, whether you're market rate or you're an affordable developer, the community views you as one way, the bad guy that's ultimately causing the rents to stay so high. And then you have local governments that, they want to do right by their citizens, they have their constituents, though they're constrained by term limits. And they know if they approve the very risky real estate development project that the community doesn't want in the short term, even though it's a great long-term decision, that probably means they're not going to be reelected. So there needs to be really a combined effort between local government, the developers, and really the communities. And community outreach is something that's extremely important, where 10, 15 years ago, if you were doing a development project, you would apply through the city, maybe it would come out somewhere, present it to, the local people that would hear about it, and that was great. Nowadays, you have so much complexity and so much misinformation that taking to social media and explaining what are the benefits to communities, it's something that really takes a lot of time. And in order to address the missing middle, we need to use every single tool in our toolbox. I applaud the city of Los Angeles. They've done an incredible job at adding different programs that have been incentivizing the development of affordable housing. They've done a phenomenal job at streamlining a lot of these different processes. And as we start thinking about what are all the different factors that could be used, we really need to start thinking first and foremost, if we add or implement a new policy from a public policy standpoint that will hinder housing, we really should be having the specialists, whether they're local economists or local developers, weigh in on what those measures are going to do. For example, I know a lot of cities they've implemented linkage fees, hoping that the market rate developers would fund the development of affordable housing. And that has not necessarily been the case. It's actually been a huge deterrent. From a supply standpoint, I mean, land costs have gotten so high, labor costs have gotten so high. The fact that prevailing wage is even a factor that's thrown on the table, it really kills a lot of projects. To give you an idea, if we're doing a development project in Los Angeles, and majority of the projects that we're doing here are wood frame, so it's called Type 5 construction. If we have to use union labor, that's adding anywhere from 20 to 25% more in our costs to build out these development projects. And on top of all the other public policy measures that are added into the project, and if we have any sort of hiccup between the time that we apply for the entitlement or really asking the city permission to do this development to the time that we actually start building, all those financing costs are ultimately added back in to our development, which means that by the time we're building our project, you're seeing affordable housing deals costing anywhere from $400,000 to $500,000 per unit by the time they're being delivered. And that becomes extremely unsustainable, making that any sort of project that's on the affordable space, you need a lot of government subsidies. Anything that's on the market rate side, you have to have, a smoke and deal in an amazing location that you're able to justify the lower rents, or you're just going to end up building the Class A luxury housing stock that everyone else is building.
So you make real estate investing sound a lot less glamorous than it does on TV. But this is great perspective for those who don't have a depth of knowledge on the matter. Makes me just want to find a tiny home I can drag around on wheels. But seriously, it sounds like there may be some unintended consequences in government policy that's driving some of these changes.
I think it's extremely important for everyone to get involved in thinking about, creative solutions on how we can add and build not only more affordable housing, but really petitioning local governments on not implementing measures that are going to reduce housing. There is a big challenge that California is coming up to face on the ballot, which is the repeal of Costa-Hawkins. And this would essentially add a lot of rent control power to local governments. And what that's going to do, it's going to disincentivize a lot of developers. And what's interesting about the real estate space is that capital is a very conservative thing. It's not even whether the measure will pass or not pass. From the moment it was announced up until the measure, we have seen construction go down month over month. We've seen transaction volumes go down month over month. And it's a really scary thing, because if we're not adding more housing and we implement more rent control policies, we're effectively benefiting the people who got here first. And if you're looking at moving somewhere, you're probably not going to move. If you're looking at getting a new job and it falls outside of your zone, or it's a little bit too far from work, you're not going to take the job. If you're really stuck in a situation where you have an amazing opportunity and you know you can really do something incredible, but that means that you have to leave, and now all of a sudden your housing cost becomes a very big factor that influences you. Or worse, if you do decide to take that job, now you're giving up 2.5, 3, 4 hours of your time to drive across the city, which is adding more traffic, adding more pollution, messing up the environment. And ultimately, none of this is really helping anyone on a social standpoint. A lot of people don't think, but we have a huge housing supply issue. We're in the middle of a crisis. We need to be able to allow the market to develop. We need to build big, we need to build fast, and we need to build quick, or else it's going to continue getting uglier. A lot of the work that we did in the Midwest was housing a lot of homeless veterans. This is work that's extremely important. And as we're helping house a lot of these homeless individuals, we're starting to notice that we don't have a lot of the social services that are helping people get from one point to another. So we all have to work together. And the more heads that we can put together to help make our communities better, everyone wins, everyone benefits, and ultimately everyone profits.
Well, and that's a great sentiment to close on. Lots of interesting stuff. We covered a lot of ground. This may be our longest episode to date. André, how can people find out more about you and your company?
So my company, Bueno Group, we have a website. It's www.bueno.investments. Very active on LinkedIn. So we publish a lot of articles. We love to write. We've published a number of articles really talking about this through the Forbes Real Estate Council. And ultimately, if we're doing deals in a city near you, I hope you guys reach out and come say hi.
Thank you, André, for your time.
Absolutely. Thank you. Bye-bye.
Well, that's our show. Thank you to André Bueno for sharing his story, perspective, and advice. Until next time, thanks for listening.
This has been Inside Forbes Councils. Please be sure to subscribe to us on iTunes, Spotify, or wherever you get your podcasts. If you're a member of the Forbes Councils and would like to participate in our podcast series, please email your member concierge. If you're interested in joining a Forbes Council, learn more at forbescouncils.com.